Tired of the guessing game when it comes to your crypto taxes? Are you spending hours sifting through your Gemini transaction history, trying to figure out what you owe the IRS? You're not alone. The world of crypto taxes is notoriously confusing, and the IRS isn't making it any easier. But if you're a Gemini user, you've come to the right place. In this video, we're going to break down everything you need to know about Gemini tax reporting. We'll cover what forms you can expect, what transactions are taxable, and how to make sure you're compliant without pulling your hair out. By the end of this video, you'll have a clear roadmap to navigate your crypto taxes with confidence. Let's start with the big picture. The IRS treats cryptocurrency as property, not currency. What this means is that every time you sell, trade, or otherwise dispose of a crypto asset, it can be a taxable event. This is similar to how stocks are taxed. You'll have a capital gain if you sell for a profit and a capital loss if you sell at a loss. But it's not just about selling. Activities like receiving crypto as a reward, earning staking income, or even using crypto to pay for goods and services can also trigger a taxable event. Now, let's talk about Gemini specifically. Does Gemini report your activity to the IRS? Yes, absolutely. As a US-based exchange, Gemini is legally required to comply with IRS regulations. However, the level of reporting they do might not be what you expect, and this is where a lot of the confusion comes from. For a long time, the crypto tax landscape was a bit of a Wild West. But new legislation and IRS guidance have brought some clarity, and exchanges like Gemini are adapting. The key thing to understand is that Gemini's reporting is limited to certain types of transactions. First, let's look at the tax forms you might receive. The main form you'll get from Gemini is a Form 1099 MISC. This form is used to report miscellaneous income. You will receive a 1099 MISC from Gemini if you have earned over $600 in income from the platform during the calendar year. This includes things like referral bonuses, promotional rewards, and staking income. When you receive a 1099 MISC, Gemini also sends a copy to the IRS. So, if you get this form, it's a huge red flag to the IRS if you don't report that income on your tax return. Now, here's the crucial part. As of right now, Gemini does not issue a Form 1099-B, which is the form typically used to report capital gains and losses from trading. This is a common point of confusion for many users. You might think, well, if they don't send me a form, I don't need to report it. That is a dangerous and incorrect assumption. The IRS requires you to report all capital gains and losses from your crypto trades, regardless of whether you receive a 1099-B. This means the responsibility is on you to track every single trade, calculate your gains and losses, and report them correctly on your tax return. So, how do you do that? It might sound daunting, but Gemini has made it easier to get the data you need. You can export your complete transaction history from the Gemini platform. This will give you a detailed CSV file of all your trades, deposits, and withdrawals. You'll need this information to calculate your cost basis, which is the original value of the crypto you bought, and your proceeds from the sale. The formula for calculating a capital gain or loss is simple: sales proceeds minus your cost basis. You'll need to do this for every single transaction. Let's walk through a quick example. Say you bought one ETH for $1,000 on January 15th. Then, on July 15th, you sold that same one ETH for $2,500. Your sales proceeds are $2,500, and your cost basis is $1,000. That gives you a capital gain of $1,500. This is a short-term capital gain because you held the asset for less than a year, and it will be taxed at your ordinary income tax rate. Now, let's say you held that ETH for more than a year before selling it. That would be a long-term capital gain, which is often taxed at a lower rate. This is why tracking your dates is so important. The problem with a simple spreadsheet is that crypto trading can be complex. What if you're trading one crypto for another, like ETH for BTC? The IRS considers this a taxable event. You're essentially selling your ETH and using the proceeds to buy BTC. And what about fees? Or airdrops? Or those seemingly small payments from Gemini Earn? It's easy to miss a taxable event if you're not an expert. This is where a dedicated crypto tax software can be a lifesaver. These platforms, often called crypto tax calculators, are designed to automate this entire process for you. You can connect your Gemini account via API or upload that transaction history CSV file you downloaded. The software will then crunch all the numbers for you, calculating your capital gains and losses, factoring in your cost basis, and generating the necessary tax forms, like a Form 8949 and Schedule D, which you need to file with the IRS. Some popular options include CoinLedger and TaxBit, which has a partnership with Gemini. Using a service like this can save you a ton of time and, more importantly, help you avoid costly mistakes. Let's quickly touch on a few other common activities on Gemini and their tax implications. First, transfers. If you transfer crypto from your Gemini account to another wallet you own, this is generally not a taxable event. It's just moving your property from one place to another. However, if you transfer crypto to another person or use it to pay for something, that would be a taxable event. Next, rewards and bonuses. We already covered this, but it's worth reiterating. Any crypto you receive from a promotion, a referral, or a sign-up bonus is considered ordinary income and is taxable based on its fair market value on the day you received it. This is the type of income that's reported on your 1099 MISC. What about airdrops? An airdrop is when you receive crypto for free. The IRS treats this as ordinary income, and its value at the time you received it is taxable. The same goes for staking rewards. The interest you earn from staking your crypto is also considered ordinary income. Finally, what about the digital assets question on your tax return? When you file your federal income tax return, there's a question on the first page asking if you have engaged in any transaction involving a digital asset. The IRS is very clear: you must answer this question truthfully. If you've done anything with crypto other than simply buying and holding it, the answer is most likely yes. This is a new level of enforcement from the IRS, and they are actively using this question to identify non-compliant taxpayers. So, to wrap this up, let's do a quick recap. Gemini reports certain income to the IRS on a Form 1099 MISC if you've earned over $600 from activities like staking or bonuses. Gemini does not provide a Form 1099-B for your capital gains and losses from trading. You are still legally required to report all of your crypto trades, including crypto-to-crypto swaps, on your tax return. You can download your complete transaction history from Gemini to help with your tax calculations. Using a crypto tax software is highly recommended to automate the process and ensure accuracy, saving you time and avoiding potential IRS penalties. Remember to answer the digital assets question on your tax return accurately. With that said, thanks for watching, and until next time.